to believe you guys are still here with me. It's a beautiful Friday morning. So guys, I've been able to share my screen. I want to believe you can see my screen. So from fundamentals, you can tell the major thing that drives the market, right? The major events across the globe that is responsible for moving price, right? So well, there are so many websites where you can get this fundamental. So many of them, right? So many of them. So ranging from you can use the Forest Factory. That's the basic one for everybody. You can equally graduate further to my Facebook. You can use Trading Economics. You can use investing.com. So I think I have a lot of new clients, newbies joining me. So I would like to use the basic, right? So let's use the basic, okay? So I will click on Forest Factory here, right? So this is Forest Factory. So guys, I'm on Forest Factory right now. So yesterday, just like we promised, what we do this every morning. So we try to give you tips and tricks how to drive the market. We also give you run you through reviews of what the market has done, previews of what the market will do. So let's run through what the market did yesterday. So yesterday we had, yesterday being Thursday 11, glorious day of the Lord. So yesterday we have GDP, right? Gross domestic product. So what we try to do is to focus on the red impact news. Okay, for those of us new joining us for the first time, right? Especially here in Uyo. So guys, these red ones are the high impact news, as you can see. So this high impact news means they are the high volatility news. Another word for impact is volatility. What is volatility? The rate of change of price with time. So high means the rate of change will be very high, so that means it will move very fast, right? So it causes the market to move very fast. So this one was by 7 a.m. It has already passed. That was yesterday. I'm giving you reviews here. So it came out good. So this green here means good for the pound. Of course, pound was strengthened in the morning. Then also we had the CPI, the much talked about inflation data, right? CPI. So CPI means consumer price index. So there are different categories of it, as you can see. Okay. So the CPI came out really bad, as you can see, even though unemployment rate here came out good. But CPI is a stronger data, right? So this CPI will signal for the fact that it came out this color, right? So what the Federal Reserve they do, one of their core mandates is to look at what the inflation is in the economy so that they can stabilize the economy. So one of such tool they normally use is the CPI, right? They use CPI, they use PPI. We have PPI today. So this is PPI, guys, okay? They also use PCE, personal consumption expenditure, right? So, but then CPI comes out before these other ones, right? And CPI seems to steal or grab most of the glory, if you like, most of the impact. I want to believe you guys can still follow me, okay? So CPI is Consumer Price Index. So it measures the changes in the price of goods and services purchased by the consumer. That means from the consumer aspect of things, okay? So this is inflation data, right? So as you can see, it came out bad. The red color here means bad, right? So that means for the fact that it came out bad. So if it came out good, so if it's good, it will signal the Federal Reserve that the economy is still in good shape, right? So, but if now that it came out bad, it's a signal to the Federal Reserve that they need to start cutting down their interest rate. So that is why, and cutting down interest rate weakens the currency, right? It weakens their domestic currency. Weakening the currency is why we saw USD was going down to the grave, guys. I want to believe you were able to you took part of that. USD slaughter of yesterday. So currency like GBP USD went up as much as 65 to 70 pips just within few minutes, up to, let's say, within 1 to 5 minutes. went as high as up to 60 to 70 pips. That's 60. Okay, let's just say 60 pips for our example, right? That's 60 pips. If you're trading with 0.1, every 1 pip, with that 60 pips, if you're trading with 0.1, every 1 pip is $1 on GPUSD. So you can guess 60 pips will be $60. So $60 times our current exchange rate, that's about 90,000 naira, right? So same thing happened in Euro USD. Guys, I don't know whether you guys are still with me. I think this morning I'm not really fast. So this morning I'm not really fast. I'm kind of slow. The weather is also slow, so you will bear with me. So guys, I think that's about 90,000 naira. So if you're trading with just 0.1, who can trade with 0.1? Those that have small as 10, 100K can afford to trade with 0.1, as you can see. So what about those that have a million naira? Come on, they will not use 0.1, they will use 0. Maybe they'll use 0.5. So if you use 0.5, every 1 pip is $5, right? Every 1 pip is $5. So $5 times 60, so that's $300. So that means it's possible to make $300 from CPI, trading CPI, right? So the $300 times our exchange rate, which is 1.5 or around 1.5, that's 450,000 naira. So you can see. So it's not that you can make this money every day, okay? Let's tell ourselves the truth. You can make this kind of money during high impact news. Example is CPI. Another example is PCE, personal consumption expenditure. Another example is PPI. So these are some of the tools in the hand of the Federal Reserve, right, chaired by Jerome Powell. So these are the tools they normally look at, right, to know if should we increase, should we should we be holding the rate, should we be cutting the rate, or we should be increasing the rate. So these are some of the things they look at. So guys, I want to believe you understand why. So this is just a review of what has happened. Okay, so as you can see, that was what happened. So today being Friday, we have in another news by that same time 1:30. So one of the ways you can trade this news. So one of the ways you can trade this news is the same way, the same inflation data, right? Measures the creeping inflation into the economy, but this one is measured from the producer aspect of things, right? So it measures changes in the price of goods and services as produced by the producer. So this one is taken from the producer aspect of things. So guys, you're still with me, right? So but then take note, please. CPI steals most of the glory or most of the outcome than PPI. Then, of course, PCE comes out about 10-11 days after CPI, right? So you may want to mark your calendar 10-11 days after CPI. So as a new trader, you can just be doing well trading fundamentals and be making money by the side. Then, of course, then you now be learning technical analysis gradually, right? Every day. But then you'll be making money just by focusing and trading this one. So let me run very fast. So for today, for now, being past 8 a.m. in the morning. So this news is by 1:30. As you can see, we've not had any result here, right? So for those of us really advanced traders, please bear with me the way I'm explaining these things, okay? So we have some new guys here, so they also need to understand these things. So don't say I am explaining too much. All right, guys. If you're just joining us, I can see the number has increased. This is our morning market review. We do this in the morning. 8 a.m. is the time. We stop by 9 a.m. One solid hour of market analysis. We try to give you previews, reviews, how to navigate the market. My name is Emmanuel Udogu. So we're expecting the result here by 1:30. So simply put, if the result here is out, and of course by 1:30, and it's 1:30 Nigerian time, please. If the result here is out and is which color now? If it is green, it is good. If it is red, it is bad. So you may want to also trade it. Okay. So, but then we don't normally expect it to move as much as CPI. Okay. So guys, I think that will be all. So next week, is it next week or next 2 weeks? We should be having PCE, personal consumption expenditure. So that's another tool in the hand of the Fed to know to that they use to study the inflation. Okay, so these all of these put together, they use to come up with the value of their currency by either increasing or cutting the rate. So guys, I want to believe you're able to get that. So let me look at the room right now. Okay, no question here for now. The chat room. So you're asking, can I know the site you are using? So sir, it's Forex Factor. So if you look at the top left, you should be able to see the site I'm using, forexfactory.com. Forexfactory.com. All right, guys, so let me share my screen so that we can do technical analysis. So the type of technical analysis we do, is called market structure analysis. So we like to look at the market structure entirely so that we can tell that's what makes us traders, right? So we want to go deep. So we are the type of traders that like to take our destiny in our hand. uh, the truth is that with fundamental, you are just following the news, right? So whatever direction the news moves to, you can just trade it. And of course, I did mention you can use buy stop and sell stop, right? So if you had used buy stop and sell stop yesterday on GBP USD, Euro USD, you should have picked your buy stop, right? And of course, leave out the sell stop. The buy stop would have given you profit. So with fundamentals, the kind of it doesn't seem like you're taking your destiny in your hand, right? So it doesn't seem like you're facing the market. It looks like whatever direction the market moves, you just want to trade in that direction. Now, but in technical analysis, you're facing the chart. You want to interpret what the market is doing. You want to look at the chart face to face. You want to come up with which direction is it going. So, guys, let me quickly share my screen. I haven't said that, so I've shared my screen right now, guys. You can see my chart. So please indicate if you can see my chart. So you can see my chart. You just help me go to the chat room and then just type chat, please, guys. Thank you very much, guys. So please. So your question here is if one of the news comes out red, the other one comes out green. So that will be mixed, right? So if the news is mixed, of course it will reduce the speed or the movement, right? It will reduce the move. And another thing you have to know is that if there are two news at the same time, you want to know which of them is a stronger news, right? Which of them is a stronger news? For example, if you look back, guys, can you still hear me? For example, I'm trying to answer this question here. If one of the news comes out green, the other one red, right? So if you look back at yesterday, we had the unemployment rate. The unemployment rate came out as green. Let me show you. The unemployment rate came out good, but the CPI came out bad. So one thing you want to know is that you want to know which of these news is a stronger or a bigger news, and that's the word, bigger news, right? So the bigger one should always carry the day, right? So that's the next thing you have to know. So especially if we have two news. So look here, we have unemployment claims, right? So this is actually unemployment rate, right? So now these are the number of those queuing up filing for unemployment benefits. Okay, so these are those filing for unemployment benefits, right? So if you're filing for unemployment benefits, we can just guess that you're unemployed, right? So look at it. The value came out green, as you can see, right? But CPI is a much stronger data, right? Or tool in the hand of the Fed, the Federal Reserve, right? So it's a much bigger news because this one tells you what is happening, tells you more, right? Or it's a major tool, right, that tells you what is that tells you about inflation, right? Okay. So that is why. So as you can see, the question you asked, this is green now. You're not seeing it, and this is red. But the news came out really bad, right? So the more you stay on this chart, the more you study, the more you know which of them is stronger. So CPI is stronger. So just like I told you, CPI is also a bigger tool compared with the PPI, right? And of course the PC. So guys, I think we've done justice to that. Let me switch back my chart, guys. So we have a lot to discuss. So let's be fast with our technical analysis. So guys, as you can see, my chart, I've switched again. This is my chart. So this is a USD index. I normally like to do USD index first. What's the USD index? It's simply the US dollar, right? So we are looking at the strength of the dollar, right? So what we call market structure analysis. What we call structure is simply we try to look at the obvious highs and lows of the market, right? And then in market structure analysis, we believe that the highs and the lows are the most important area of the chart, right? So why? Because there is a lot of liquidity that is trapped or that is resting above the highs and the lows. So what do I mean by liquidity? Liquidity is simply orders on the market, or if you like to say liquidity is simply money, right? So if you look at a street, right, a street that has let's say a street that has small kiosks, right, a street that has a church, a street that has a mosque, and a street that now the same street, sorry please, the same street has a church, the same street has a mosque, the same street has kiosks, all of these small shop, right? Okay, fine. And the same street has what now? Let's say a betting shop, right? Then that same street has a bank, right? So among all of these places I've mentioned, which of these places or which of these business locations do you think has more money? So I'll need the answer in the chat room, please. So which of these places, okay, it's cool too, right? So which of these places do you think has more money? That means you can just barge in and then you will see money. Let me get the answer, guys. That's the bank, right? Thank you very much. That's the bank. Thank you. So in the same way, if you understand that, so that is what we could call liquidity, right? Liquid, right? Liquidity, money. So in the same way, if you look at all of the chart, it doesn't mean there is no money in the bank, in the school, or in the church. It means the volume you're looking for, the big money, right? They are resting in the bank. So in the same way, sir, if you look at the chart, right, the highs and the lows have most of the money. So quickly, what do we have at the highs and the lows? We have orders, right? So we have the buy stop, sell stop. We have also buy limit, sell limit. We have stop losses, of course. Stop loss is an order, is a sub order, right? That cannot stand alone, that depend on the main order. So this also take profit is also an order. So guys, you understand that, right? So what we normally do is the market normally tries to trade above the highs and above the lows. So that is one of the function the market does. So the market trading above the highs, above the lows, we call that a break of structure. So guys, that means the highs and the lows are the structure. So if you understand that, let me run very fast. I think I've built a foundation now. So let me run very fast, right? Because there is no time. So as you can see, what has happened here, if the market keep trading above the highs and it's not trading below the lows, we call that an upward trend. So that means we have been riding an upward trend on the US dollar until right now that we can see the market has now traded below the low to form a new low. So we call that a market structure shift, right? Market structure shift. So as you can see, the market created what we call triple highs, right? No, double highs. This one did not really get to this high. Double highs before it turned. So double highs, the market creating double highs means two things. Right? Number one is a sign of weakness for the trend, and number two, it can be an attraction, a magnet, right? Because liquidity can still be resting above it. So liquidity can still be resting here. So that means sometime in the future, the market would like to come to this area. Okay. So guys, so for the fact that we have traded below this low, we started going down. So you can conclude, right? You can call your family and friends and say, hey, USD index is now on a downward trend. You will not be wrong. So as you can see, we have started printing lower lows, right? So this is a low, right? We started printing lower lows. So So by the time you can tell the direction the trend is going, then you are free to trade. If you cannot tell, or guy, you cannot trade. Oh. So by the time you can tell the direction the market is going, telling the direction, telling yourself the direction is what we call directional bias. So we have the bias right now, as you can see, right? So quickly, but then don't forget, anytime there's a break of structure, by that I mean anytime the market trade below a low, we normally expect a retracement. So after all of that slaughter of USD yesterday, we should be expecting a retracement, and then it has started, right? We should be expecting a retracement. Retracement means the market should start going up, guys. Okay, so we expect a little retracement. Retracement does not mean the trend have turned. It doesn't mean a reversal. It only means that the market will need, since it's a downward trend, the market will need to offer premium prices, right? I mean high prices, so to attract more sellers so that it can start going down even more. For example, what happened here? This was a replacement. It was trying to offer higher prices. So guys, you understand that, right? So let me run to let me run to let's do Euro USD first, guys. Let's do Euro USD, right? So guys, can you still see my screen? Euro USD, quick one. So this is Euro US, guys. I want to believe you are getting value from it. Okay, this is Euro USD. So quickly, yesterday I was just trying to go through my chart. Then I looked at it very well. I discovered from the beginning of this year till now, Euro USD has been okay. This is the beginning. So this is the daily chart. Okay, this daily chart, as you can see, right? This daily chart. So this is the beginning of the year. This is January, right? So this is the January candle. So if you watch carefully, from beginning of this year till now, so if you watch carefully, we have been printing lower. This is a high, this is a lower high, right? So this is a much lower high, and this is another lower high, right? So this is what I saw. So that's why sometimes you may want to just change your time frame so that you can have a bigger perspective of what the market is doing. As you can see here, right? This is a high, this is a lower high, this is a much lower high, this is another lower high, right? So what we want to call this is what we call a trend line, right? So the market has been riding on this trend line, as you can see. So that means by just looking at, or by just studying the trend line, you may want to come to a conclusion that anytime the market gets to this trend line, right, it simply means the institutional trader sees that price as a very high price. So high prices are attractive, right? High prices, high prices attract institutional traders, right? To do what? To sell. So they will start selling. It goes down again. I mean, those hedge fund traders, those asset managers. So also the same thing happens here. High prices. So don't you think this is another high price, right? So let me have you answer from the comment section. Don't you think this is another high price that will attract institutional sellers, right? Don't you think so? Don't you think so? Don't you think so? From what we have here, don't you think so? Now, you may equally not think so. You must not say yes. Oh my God. All right. So that means because we had something like this. Let me draw it for you to make it easier. Now, please, because of the kind of speed I'm running with, we might not analyze so many instruments. But what I'm doing is I'm giving you some gems that if you understand it, you can copy and paste into other instruments, and of course to get value for yourself. So as you can see, anytime it's at this level, it normally retrace, as you can see. Now, don't you think it has gotten to around that same level again, something like this? Okay, so if you want to do forecast, just like technical analysis is, we'll try to look at what the market has been doing in the past, right? So you want to look at the left-hand side of the screen. So the right-hand side is the present is what backs the future, but then the left hand side is the past. Remember, life is lived, can only be lived forward, but understood backward. So the same thing with the chart, right? So analysis, placing of your trade is done forward, but you understand what is happening on the chart backward. So backward is what we have just done. Then of course, I think this thing should come down like this, right? So that means now, but please, this is a daily time frame, right? So those of you that can take this kind of trade and leave it for long, you should be having big money, or you should be having good balance, right? So, but then I normally tell my student, what is that money doing in the bank? Withdraw it and fund your account, right? It doesn't mean you must trade with the whole of the money. No, it means why here, why the money is here, you can be taking advantage of opportunities like this, right? Can be taking advantage of opportunities like this, and then you can be doing well, guys. So quickly, so that means somewhere here should be a very big area attractive to sellers, right? So let's drop down to a much lower time frame. So that is just the information we need. That's just the information we need at that's just the information we need at this daily time frame. So I will drop down to a much lower time frame. So that would be, let's do H4 time frame and see. So that means from what we just looked at, sir. So that means this area. So I can draw a rectangle there. So that means this area, I'm expecting the market to react very well around this area, as you can see, right? I'm expecting the market to react. How? To react downward. But guess what, sir? On this H4 time frame, what kind of trend can you see here? This is an upward trend, though, right? Okay, so this is what we call top-down analysis, right? We call this top-down analysis. So I mean, now on the H4 time frame, we can see higher highs and of course higher lows. So that means the market is trending upward. So we got a shift, market structure shift here. I mean, the market traded above this high to form a new high. We call that a shift. So guys, so we have a retracement. As you can see, we have another big move again to the upside, guys. So without wasting much time, let me just fast forward to this point, right? So this is actually trading upward, as you can see, but then I'm expecting a reaction, right? And we got that from the daily time frame that, hey, the prices is at institutional areas of supply, right? Institutional areas of supply will be an alert to those big traders that trade millions of dollars to want to start selling. So I'm expecting a reaction around this area, guys, right? Now, but then as a day trader, you may want to still follow this trend. Okay, so let me drop down to a lower time frame, because of course your stop losses should always be there to guide you, right? Now, but then because of I've mentioned that as a day trader you may want to still trade, of course. So this is 15 minutes time frame. Let me give you straight what I expect the market to do. Okay, now, for the fact that we have traded this high, okay, for the fact that we have moved up this much, right? So we are on an upward trend, right? We are on an upward trend. So what I said earlier is for you to bear in mind that this area is an institutional area. So you can see immediately we tap into that area, you can see the reaction. The market quickly reacted downward very fast. Immediately we tap into this area, the market reacted downward very fast. But then you not deny the fact that we are riding a trend. As you can see, this is a trend actually, right? So this is a trend. So this is a trend. This is a trend, and for this is a trend line, right? So for those of us what we call day traders, right? So you may want to trade the trend, right? So, but then trading the trend is a very short trade, right? So you don't expect it to trade above this high. So even though it may trade above the high, but you don't really expect it. The reason is I'm expecting the market to do a big reaction in this area. I mean, for us to start trading downward, right? Okay. So then, but if you zoom into the area, we're already having a signal. What kind of signal? we have what we call bullish engulfing, even though that is on 15 minutes time frame. So that kind of signal is a signal that the market may want to go up, as you can see. So you can do a buy, right? And put your stop loss down here. For those of us that want to do an instant trade, your stop loss can be down here. So let's just do a buy. So you may want to do a buy. Then of course your stop loss can be down here, bottom here. So just a small stop loss, as you can see. Then of course, remember this is a very short trade, though, guys, because I am still expecting the market to give me good reaction in this area. So then of course you want to do a take profit, right? I don't want to take it to this high, it's too high. So let me take it to this area. Why am I stopping here? The reason I'm stopping here is that I am seeing a zone, right? I'm seeing what we call an order block. This red candle here is an order block, right? This red candle is an order block. So guys, let me run fast. So okay, let me look at this question. You say, will PPI have effects on dollar? Yes, sir. Right? Yes, sir. That particular news is from US, right? So it will have effect on the domestic currency. Very well, sir. But I mentioned earlier that the effect may not be as big, as wide as CPI. So, sir, what time zone is best to trade technical? Okay, we are in the best time zone, so you may want to just trade maybe London session and New York session, right? So I think I've answered that question. So how much do I need? Uh, where is that question? The question don't disappear. How much do I need to trade on the daily time frame? How much? Okay, if you want to trade on the daily time frame, now trading on the daily time frame means you are a swing trader, right? Or you're a position trader. It means if you place a trade, you're willing to leave that trade to run for a long time. It's not that the next day you're seeing small negative and you're already shaking. No, sir. Eh? So it's not just the money first. It is the stuff you have in you. Can you place a trade and leave that trade to run for days? By days, I mean the trade is running. Okay, the trade is running for weeks, right? Because for in the daily time frame, one candle is 1 day. Okay, so if you place a trade, before you even see your confirmation might take some time, right? So if you now finally place the trade, that trade may last for days. So if you want to hear the monetary value, if you have up to 1 million naira and above, let's say up to 5-10 million naira, you can be trading on a daily time frame, right? But I wouldn't advise it because I don't think you can do that. So let's leave this one, guys. Let's leave this one. Let's do so this is how I trade. Okay, I normally place my trade with a smaller size, then waiting for the market to give me another opportunity to enter again. And those of you that have been following us for some time, you notice that is the way I do trade here. Okay, you place you don't go all in. You don't go all in. Write it down somewhere. You don't go all in. The market can still humble you and give you a better price. Now, if you're buying a better price, is a cheaper price. If you're buying a better price, is a discounted price. That means the market can still offer us more discounts. Where can the market offer discounts? If the market trade a little bit lower inside this fair value gap, that's a discount, sir. So I might want to buy more. All right, guys, let's do GBP USD. The same thing, I think I saw the same thing on GBP USD. So this is GBP USD, guys. So let's look at GBP USD. So on GBP USD, so on GBP USD, let me just show you something quick, really quick here. Okay, remember I did the daily time frame on Euro US. Okay, so let me also do daily time frame here and show you something really quick. Okay, so on GBP USD, guys, so for this GBP USD, like studying the chart also, we saw that the this is January, right? Look carefully, guys. So this is January. So this type of analysis is also good for you so that it will help you do well. Okay. So this is January. This is January, right? So what are we seeing here? We are seeing carefully that this was the high of the year, right? This was the high of the year, and that high of the year was in March, right? 7th of March. That was the highest price of the year, right? So sometimes you need to look at this other perspective. So I'm giving you a different perspective of the analysis, and this is actually a long-term form of a long-term perspective. But then, if you have the long-term perspective, wealth is about having a long term, right? So that means if we are to link it to trade, it means the biggest profit can be made if you're looking at a long-term perspective. So now you got it right. So this is the highest price of the year, right? But if you look at yesterday, we violated the highest price, right? And of course, I told you already that the highs and the lows is where the most of the liquidity lies. So that means the liquidity that was resting above this high, the market has actually trapped it, or the market went for it yesterday. So the market has accomplished something very huge. And anytime the market accomplishes something very huge like that, so automatically we are establishing a new high, right? Of the year. Which year? The blessed year of the Lord, 2024, right? So we're establishing a new high right now. In fact, we have established a new high. Now, take note, sir. If you study the chart very well, you will learn for yourself. You will receive wisdom to understand how this market works. Anytime we have a new high like that, right, it usually comes up like in form of a bubble. Up to 90% of the time, a new highs and lows appears as a bubble, especially in this long-term perspective. Now, look at what I mean. Before this new high of March, what was the highest price of the year? The highest price of the year was somewhere in the highest price of the year was somewhere in January, right? So immediately we took out that high to form a new high. That was a bubble, and that bubble actually burst, right? So the highest price of the year was somewhere in January. So this was the highest price of the year, right? So let me drop a line there. So this was the highest price of the year, right? So immediately we took out the highest price of the year, we formed a new high, and that was a bubble. By bubble, I mean immediately we got the new highest price. What happened? It burst. By burst, I mean it started trading downward, right? And it went down very well. Low. Let's measure how many pips it went down. So this is how we forecast and analyze the market, guys. So it went down up to how many pips now, guys? 585 pips. Can you imagine that? Now, long story cut short, guys, we have a new high. If you understand what I'm trying to do here. So we have a new high. By that new high, it has traded above this high. So that means in no time, this is daily time frame, please don't forget. In no time, we should be expecting it to also do the same thing, right? We should be expecting it. We should be expecting it to do the same thing. So if you understand what I mean, let's go down the lower time frame. So this is for daily time frame, and that information is good for you. So on the H4 time frame, guys, we are riding upward. We are going up with full speed, full momentum, as you can see. So I'll drop down to a much lower time frame. Okay, so I'll drop down to a much lower time frame. That time frame would be 4 hours time frame. So guys, without no doubt, no ado, as you can see, we are riding up. Well, let me drop down to 15 minutes time frame. Let's see where we can pick our trade. Okay, so obviously where we can pick our trade as pass, right? So you don't chase the market, you hunt the market. You hunt. So there is this, most person would like to chase, but you don't chase, you hunt. So this is actually a very small uh order block there, what we call is demand zone, right? And the market has picked up from there. But if you watch carefully, the market have done what we call an internal break of structure. By that I mean the market has traded above this high, So if whenever the market trade above a high, I don't like to enter again, because any other move would be like an extension. So I will need a retracement a little bit to enter my trade, right? Because we have traded above this high, right? So guys, remember we place an instant trade on Euro USD, but yeah, we need a little retracement. Now, this retracement we are looking for is what we call conservative trading, right? So that means we are not aggressive, we are conservative, right? So a little retracement that we can buy. So where are we going to buy? So we'll buy somewhere around this area, right? So I'll buy somewhere around 1.29070. For those of us very aggressive, you may want to enter buy. Now, but for me, I will just wait for a little retracement. So somewhere around anywhere around this area, guys, right? Anywhere around this area, this shaded portion. So 1.29170, 1.29070. So somewhere around this is an area, right? I'm not giving you a particular price, it's an area. So your stop loss for that particular trade, your stop loss will be found below the lows, right? Then of course your take profits, if you enter anywhere around there, will be found very close to the high. You don't want to target the high, okay? So guys, let me look at the comment section, then we can continue. So analyze US 100. Okay, fine. Good morning, coach. Please let's analyze US 2000. I'm on a sell, but still negative. Okay, you're trading US 2000. So I'm supposed to jump to gold right now, but because of your on a sell there, let's go there. But if you're trading US 2000, I want to believe you have good capital base. If you don't have good capital base, start calling your account officer, and of course start adding more money to the account. Okay. So because US 2000 is one of the heavy assets that we have here, very heavy. So that means you don't go there with small money. Okay. So please, I don't want to believe if you're on a negative. So let's just look at it, please. So US 2000 real quick. So I've given you what to do on. So you say you are on a sell on this type of move. So I want to believe you're trading with 0.01, right? Or you say you can one take profit at any time, irrespective of placed orders. Yes, now. Yes, sir. You can take your profit at any time. So you say let's analyze US 2000. I'm here on US 2000. Let me do some broad-based analysis for you because obviously the trend for a day trader is on an upward trend and you are selling. So let me look for where I can fetch small hope for you. Hope make it not ashamed. So let me let's look at where we can get small hope for you. So quickly, US 2000 is rocking an old high, as you can see. It's rocking the old high. What is it doing with the old high? Maybe they are having some negotiation. Guy, can you break me? Can you? Okay, let me show you now. So this is the old high. That old high. I mean, that means old highest price. That's what I mean. Okay, you understand that? So that old high was established in April, right? So US 2000 is rocking it. Let me paint it for you. So what we do is we try to make sure that everybody is good, right? So I jumped to this particular instrument because somebody is on it, right? So this is actually rocking it, but I think we have not violated the high, right? We are still rocking the high. We've not violated the high. By violating the high, I mean we've not traded above the high. Sir, whenever you see the market doing something like this, it is targeting to take out that high. Why? Because I explained to you that liquidity is resting above the high. So one thing you want to do is that I'm very sure, up to 80% sure, that the market will sweep through that high. Now, after sweeping through that high, we call that a break of structure, right? So if the market break that structure, the next thing will be a retracement. So, sir, you may want to endure a little bit, right? Now, enduring a little bit means you may want to add more money to your account, right? So that the endurance will be long. So endure a little bit. I know for sure that the market would like to trade above that high. Then afterwards, then it will retrace. Remember, it's an upward trend. So after trading above the high, it will want to offer discounted price so that more buyers will be attracted to low prices. Then from there, it will come down lower again. Now, coming down lower doesn't mean the trend have changed. It's just offering lower prices, right? So I want to believe you were able to follow through on that. Now, but then, if we are to drop to a much lower time frame, it will be obviously an upward trend, as you're seeing. So the going higher to a higher time frame is where we can be able to fetch some hope for you. Okay, so it might trade a little bit higher again before it will retrace. So that's the analysis there. Which other one again? Thank you very much, guys. You guys are just thanks for the support. You guys are just massively behind this analysis because I can see the number is just so let's do US 100, right? But then this US 2000 I did will most likely look like US 100 and US and the rest. So we are supposed to touch gold, right? Gold. So guys, most of you you must not trade all of this US 100 USD MTO. You can be making enough money from trading USD JPY, USD CAD. You just need to increase your lot size, right? Anyway, so US 30, somebody mentioned no US 100. Where is my US 100? So US 100 real quick. So the person that asked for US 2000, I hope you were able to get that value. Okay, wow. Euro USD has moved. Oh, we're already in good profits. No wonder you're asking for TP. So I think my TP is 1.08815. 1.08815. So if you have made profit from that Euro USD we took, can we have it at this comment section? Share your profits and shame the devil. Oh my God. So US 100 really quick. Wow. So US 100 really dump. Oh. This guy dump. But this dump is dump so that it will go up. Oh. I'm telling you the gospel truth. Uh, remember the index they move up more than they move down, right? So when you see a dump like this, guys, it is offering, just like I mentioned earlier, it is offering lower prices. Look here now. Look at this daily time frame. What kind of trend is this? Now, please, I want you to let me engage you a little bit. Go to the chat room, please. What kind of trend is this? By trend, I mean market direction, right? Remember, you are not certified to trade the market until you can tell the trend. So don't say trend is for newbies. No, trend is for everybody. So what kind of trend is this? Let's get it. Let's get it straight. So usually, so this downward movement we saw yesterday is just a retracement, right? Offering lower prices, right? Just like we saw this one. Look at this day. First day, second day, third day. Red. Guess what? After that, it has offered enough lower prices, right? Gather more traders. That's a meeting for traders, I mean buyers, so that they can come and buy. So now, and afterwards, the bought, demand increase, the price push up. Phew. In the same way, this has offered lower prices, right? So let's now, this is daily time frame, right? Now this lower prices it has offered. Now at what point is it going to cease, right? Or at what point are we expecting it to start turning to the upside again, right? So that is why you need top down analysis, right? Now from this top daily time frame, we have seen the retracement, right? Now you want to look at it from a much lower time frame, because at that much lower time frame you can be able to tell when the market have started switching, that's the word, this English word hard though, switching to the upside. Okay, now by switching to the upside we mean what we call a change of character. So you will not see change of character here, right? Because this is a higher time frame. So you may want to go down to a much lower time frame. Now, but then from this time frame, what can we deduce from here, right? What can we, at what point can we say, this market will most likely going to turn? So you may want to look at your left-hand side. Don't forget left-hand side, very important, right? So left-hand side, we are seeing what we call a resistance here, right? A resistance here. Okay, you remember that resistance was turned support lately, but this is a resistance, right? And this resistance is now what is supporting the price. So the price is actually rocking a local support, as you can see. It's rocking a support, right? But this is daily time frame, right? Please, this is daily time frame. So that means this area I have shaded is a very big area, right? For a day trader. Okay, so now around this area, I'll be looking out for a change of character. Now I'll drop down, I can use H1, H4, or even H1. Okay, so you drop down minimum 2 times the time frame, or 2 places down the time frame you are already on. So that will give you more insight of what is happening. So, but now this is what I mean by change of character. I will need to see something that looks like this. Now, for this downward movement, this is lower lows, right? This is lower. So this is a low. This is a low. This is a lower. So this is a lower high. This is a lower high. This is a lower low. A lower low. A low. So the market keep walking low, low. Now we might need to see inside this area the market doing something like this. Oh, sorry. So we might need to see the market, right, giving us a higher high. Then of course, that means this higher high should at least be higher than this high. This high is a notable one, right? Is a notable one. So let me draw this for you so that you can be able to grab this, perhaps screen grab it. Please don't forget this is Zoom, but then we are recording this meeting live on YouTube. So that means, guys, if you miss any of our session, you can get back to YouTube and of course watch it again. You can even download it if you know how to go through the back door. You can download it, watch it again. So look at this high right here, right? So we're expected to trade above that high. So trading above this high is a show of strength. It's called momentum gain. It means that we have gained momentum, right? But then once we gain that momentum, of course, the law of market structure will play in. So we'll be expected to print out a much lower a low here, right? Which will attract more buyers. Then from there, we should be expected to move higher. Now, this thing I do here can happen inside here. Okay, so just keep an eye here on it. You may want to screen grab it, right? Or even get back to YouTube again and watch. So, guys, you asked for US 100. This is it. So you're asking for the TP for Euro USD. Okay, we are still in good profit. Look at the TP here now, 1.08815. So guys, I think it's already 9. I have a class right here in Uyo. I have a physical class. So I have to close right now, guys. So guys, thank you very much. This is Emmanuel Odogu from Rally Academy. This is our morning market review. So guys, those of you that took that sell, congratulations. Don't forget to send across. Oh my God. All right, guys. Let me drop my number here. My name is Emmanuel. This is me here. So that's my number 090-090-2626-4507. Okay. Okay, you can chat me up. I really like chatting, guys, on WhatsApp. Thank you very much, guys. Please try and join us again on Monday, right? 8 a.m. is the time, guys. Thank you very much, guys. See you on the next one. Bye for now.